Thank you, Lisa Carter with Legacy Home Loans LLC,
Thank you.
for telling us how we can buy a home with a reverse mortgage if you're 62 years old and older. So I'm Vanda Crossley. I'm with eXp Realty here in Houston, Texas. And I've had the honor of meeting Miss Carter, and she's got some great loan products. So I thought I'd bring her on and have her educate us a little bit about what she has.
Thank you, Vanda. Can everyone hear me?
Yes.
Excellent.
Yes.
Good morning, everyone, and I thank
Good
you for
morning.
joining us. We're here to talk about the home equity conversion mortgage and how you can use that as a tool, adding that to your toolbox, and you can help your borrowers who are 62 or older to get into a new home with no mortgage payment. Okay. And you might be familiar with the home equity conversion mortgage. It's been around for decades, actually, but it's gained in popularity, I think, in the late 1999 or maybe the early 1999s. But in 1961, the reverse mortgage was introduced. And it wasn't until 2009 that FHA introduced the home equity conversion mortgage for purchase. Okay. And so we're going to talk a little bit about how you can use this and what you need to share with your borrowers or your clients. I'm accustomed to saying borrowers, so bear with me. How you can share this with your clients and help them understand if you're 62 or older and you have either a substantial amount of equity in your current home or you own it free and clear, you can take that money, you can help them with the sale of that home, and then they can take a portion of the funds from that sale and apply that money as a down payment on the new home. Okay. The remaining balance of the purchase will be in the form of a home equity conversion mortgage or reverse mortgage. So your borrower, your client, will not have a mortgage payment, which is key. And for realtors, it's great because not only do you get to list and sell the current home, you also get to participate in the purchase of the new home. So it's a win-win, in my opinion. Okay. So the home equity conversion mortgage is regulated by the Department of Housing and Urban Development. Everyone's familiar with that. So we all are familiar with FHA. I do a ton of FHA mortgages. This one is just a little bit different. This one is just a little bit different. Is that Valeria?
Yeah, I had a question.
Sure.
Do you want me to wait until after you're done?
No, it's fine.
Okay, so when you said you could take your a portion of your home that you would sell and apply it to the new home that you would try to buy using the reverse mortgage, is there a certain percentage or a certain amount that you have to put down?
So let's say, that's a very good question. Thank you. So let's say your client wants to buy a $500,000 home, which is, reasonable in today's market. Probably, up to 600, 700, 800,000 is reasonable in today's market. So typically your client will have to put down 50%. And so this is where the proceeds from the sale of their home, if they own free and clear or they have a ton of equity in, that's where that down payment will come from. So, and we'll get deeper into this, but not too deep because we've started late, and anyone who wants more details can reach me personally and we can talk more about it. But typically they'll have to put down 50% of the, say, $500,000 home. So they'll put down $250,000, and that $250,000 will come from the sale of their home that they own free and clear. Okay, so you get that deal, you get that listing and sale, and then you find them that $500,000 house, and the other $250,000, the balance, is taken out in the form of a reverse mortgage. So your client does not have a mortgage payment, but what they have to be conscious of is they do need to maintain the property taxes and the homeowner's insurance, right? And so the loan itself is really much easier to get approved for than a standard conventional mortgage, because there really isn't a FICO score requirement. So the lenders are going to be looking at your financial situation because they want to ensure that you do have the ability to maintain and pay those taxes and that property and the property insurance, the homeowner's insurance, right? And If you have savings, you have retirement money saved, you want to hold on to that and live comfortably and live your best life in retirement. This is a great way to do it. And please don't get me wrong. I don't suggest that this mortgage is for everyone. And I encourage you and to talk to your clients, advise them, talk to a financial advisor, talk to your families, talk to your children, because the children want that house. They might want inheritance, you know? But if those aren't concerns of yours, then this reverse mortgage option for purchasing a new home might be for you or for your client, right?
Well, who
Okay.
does the home end up belonging to at the end of the day?
So when you buy the home, and we're using the $500,000 home as an example here. So when you buy the home, we got a ton of people joining. Thank you and welcome. We've got, and so when you buy the $500,000 home, you're putting down 50 in cash. That's your equity. And so that loan, that home is yours, and it'll be yours until you either move out, pass away, or you don't pay the taxes. Your taxes and your homeowners fall delinquent. Then there's a problem, okay? But let's say you decide that you need to go into a different situation. You don't want this house for 15 years. Good morning. And so then the equity that you put in, that $250,000 that you came in with, that's your equity. And so the house will be sold at the market rate, the market value, and you still have that $250,000 equity. Now, this is assuming that the property appreciates at a standard rate of maybe 4% annually. And so you still have that equity that you can go away with, okay? Because you come in,
So-
remember, you come in with 50% of the purchase price in the form of cash.
So what happens if you pass away?
If you pass away and your heirs or the lender will, the property will be sold at market value and the mortgage will be paid, the balance of the mortgage will be paid to the lender. And if there's anything left over, it will go to your heirs. But you will never have a payment. You will never be required to pay any more than the property is worth. And there are protections in place via FHA and HUD to ensure that you will never be required to pay more than what that home is worth. It's called no recourse. It's a non-recourse loan. Okay.
So that 250,000 or whatever it was, the half that you put in originally from the equity on your other one, that goes toward the sale of the other. I mean, like if you pass away, it's not like your children will have access to that home. It has the loan essentially will have to be paid off, and that 250 goes into part of being paid off to that lender.
Well, let's say, you know, you got your $250,000 reverse mortgage on a $500,000 house. So you're in with $250,000 equity, which you came as cash. Now, your property has appreciated over the years. And so let's say you passed away, you have heirs, the property will be sold at market value. And let's assume that the property isn't underwater, that they're, you know, we're not in a situation like we were in the mortgage market crash in 2008 when there were so many properties underwater. So let's assume the property has appreciated and there's equity still, right? And so you have a will in place, you have heirs. As long as the lender gets the principal balance of that mortgage back and there's still money left on the table, then that would go to your heirs.
Okay. That's
Okay.
very good.
So
Thank you.
So Lisa, just wanted to let you know, everybody on here is not a realtor.
Oh, okay. So please feel free to intervene, interject, and ask questions. I'm fine with that. I want everyone to have an understanding, but also we're probably going to run over because we got a late start. My apologies. Feel free to reach out to me thereafter, and I can answer any questions that you have. Okay. And I'm also sending out, if you don't have it already, I've sent out a PDF. I'm happy to resend it, or PowerPoint, whatever your preference. And you can share that. You can share that with your clients, okay, when you sit down with them. But again, just for everyone that just recently joined the call, make people understand that this is a choice. This is something that works for some, but not for everyone, right? And in some cases, they have kids that want that house, or they want the money from the house when their parents pass on. In some cases, they say, kids, you're on your own, right? I'm living my best life now. I'm 70, I'm living my best life. Let me do me. And so it works for some, but not for everyone. And we want to work with the people that want to work with us, and we want to give them the products that work best for them, right? So there has to be a good fit. Okay, so let's talk a little bit about the requirements, right, for the reverse mortgage. We said already you have to be 62 or older. The older you are, the more money you can get in the form of a reverse mortgage. Okay, and we'll go a little bit deeper in that. And so you have to participate in a required home equity conversion mortgage counseling. And at the end of that counseling session, the borrower or the client will get a certificate, which is required. This can be done over the phone, so you typically don't have to leave your home. I know how many of us don't like to leave the house anymore.
That's so true. That's true.
Guilty of that. So, but okay. Again, you have to maintain your homeowner's insurance and your property insurance, as well as keep up any FHA standards, which means keep that house in good repair. Okay, don't let it fall apart. All right. Let's see. We talked about the certificate for the counseling. So the borrowers have to be 62. They have to hold title to the property. They have to occupy that property as their primary residence. Okay, so if you have a husband and wife and they're both living in the property, they have the home equity conversion mortgage. Let's say the husband passes on, the wife can stay there. Obviously, she's the surviving spouse. She can stay there, but once the last surviving spouse passes away, then that reverse mortgage becomes due and payable. Okay, and the borrowers cannot have any delinquent federal debt, and if they do, that can be paid at closing. It can be paid, and so that you can qualify and that loan can fund. Okay, we talked a little bit about the home equity conversion mortgage counseling session that's required for this product. And again, we touched on financial assessment. The lender wants to know that you do have the ability, based on your current liabilities, your current debts, that you do have the ability to pay and maintain the property taxes and the homeowner's insurance. Okay. No one wants to see someone in a situation. We don't want to put someone in a situation that is going to cause them to fail down the line, right? So we're going to look at your financial situation. We will look at the credit, but the credit score is not a determining factor. It's an easier loan to get than, for instance, a conventional loan, right? You might need a 680 to get a conventional loan, but you don't need that for the home equity conversion mortgage. Because why? You're not making any payments, right? Okay.
Is there a minimum credit score that's required?
No.
Okay.
No.
Lisa, do you have, are there restrictions on what type of property it has to be? Can it be, like they have these high-rise condos and they have all different types of homes now? That's the one question. Are there restrictions on that? And the other question is like when you say you have to stay in the home, okay, so when you are over six, like say if you're 65 and you qualify for a homestead, does that qualify you in your, like when you get ready to pay your taxes as a homesteader and stuff? And so you fall in that category as a homestead, and so that makes your taxes also lower, as sometimes you don't have to pay taxes.
Yes, both very good questions. And so, yes, the homestead, you're paying lesser taxes, right? So that doesn't change with this mortgage, this home equity conversion mortgage. And to answer the question regarding the property types that are acceptable, naturally the single family, condos. Some seniors don't want the maintenance of lawn and garden or whatever the case might be. So condos, single families, properties that are built, I want to say after 1975, and the property has to be habitable, right? It has to be a nice home. Okay. And one of the things, and we'll touch on that, and all the details will be in the PDF, but single families, condos. Also, guys, what's key here and very, very important, I think, to the realtors and to me, is the loan limit on this is $970,800. Okay, so I think we all love that, right?
Yeah.
Oh yeah.
about
We
this.
can find something in that price range.
I think and too.
You think you might be able to find something?
I think so.
It might be a challenge, but I think you could find it. But so, and I think that's fantastic because here's the thing, what if your client wants something in that price range, but they otherwise wouldn't be able to afford it? Well, guess what? Now they can because they're not making any payments. But keep in mind those taxes and that insurance. Okay. All right. So let's go down here. Bear with me 1 second. 62 have to own the property. Let's see, counseling session with the Housing and Urban Development, a Housing Urban Development approved counseling session. The property has to be the borrower's primary residence. Again, they can't have any delinquent federal taxes. Qualifying property types, Valeria, 1 to 4 unit dwellings and condos that are FHA approved. So very good question. Yes.
Okay.
Okay, so now just to go into just some of the finer points that you guys want to remember and keep in mind, the borrower minimum age is 62. And this is a lifetime loan. If your borrower lives to 120, they can stay in that house, okay? And all they'll be making are the taxes and the homeowner's insurance payments. Okay, so this is a loan for life. It won't go away until the borrower passes on. Okay, no payment required. For the income requirements, there are very limited income requirements, okay, which again speaks to the ease of getting into this mortgage. I think that the biggest piece here is finding those people who have enough equity in their home to use as a down payment, or they own that home free and clear. If you find them and they are anxious and excited about this product and they want to downsize, say they no longer want this big house. They are, what do you call it? Empty nesters. The kids are gone, right? So they have a big house and now they want a smaller house, or they want everything on one level. They can't go up and down the stairs anymore. Am I right? And these are big selling points.
Or they want a bigger house so that they can have their family come back and move with them.
I like it. There you go. See, there's so many ways to use this and present it to your clients and say, listen, this is what you can do. Talk about your lifestyle. What are you looking for in retirement? Do you entertain your family? Do you have grandkids that you want to come and have a good time? A place for everyone to just mingle and mix and just, be families, right? So there's different ways to structure this to make it attractive for your clients, okay? There's no credit score requirement, as I mentioned. There are no reserve requirements, so because there's no monthly payment, so you don't need to have 2 months mortgage payment reserves, nothing. You don't need to have that, right?
What's the guideline? You mentioned income requirement. What are they saying on the income requirement?
So this is something that will be reviewed on a case-by-case basis. I think that was Valeria. So Valeria, we look at the income and we look at your client's current liabilities, right? And the size of their family. And we want to ensure that they do have the means and the ability to pay the taxes and the insurance. And so this is viewed on a case-by-case basis. And also the property that they're looking at, as we know, in some counties, the taxes are super high. In some counties, the tax rate is lower, but as long as they have the means to make those payments and maintain, because that's one of the requirements of this loan, maintaining the taxes and the insurance, we want to determine that they do have that means to do that.
Okay.
So it's a little bit different. We're not looking at a debt to income ratio. We're looking at, can you pay the taxes based on the liabilities that you have in your credit report, these kinds of things. How many people are in your family? And in most cases, we're going to be looking at 1 or 2 adults, right? Husband and wife, or, a widow, or whatever the case might be. Okay. All right. Okay, so let's see. What else can I touch on? And please feel free to dive in if you have any questions. Okay. So let's talk a little bit about the benefits to your borrowers, your clients. and we touched on them before, but again, your client might want to eliminate mortgage payments. They're going into retirement, right? A lot of these people may now be on a fixed income. What better thing could there be than to have a new home and not have a mortgage payment, right? You're on a fixed income. It increases your purchase power. You can buy more house than otherwise if you had to qualify based on your income, right? Your income may have decreased in retirement. It may have, but not for everyone. But it still increases your purchasing power. You can go up to, as I said, $970,800. In Texas, that can get you a heck of a lot of house. Am I right?
Mm-hmm.
Yeah. Some folks might want to preserve the cash that they have, right? Because they want to live their best life in retirement, right? They want to travel. They want to, spoil the grandkids, whatever the case might be. So they might want to preserve their savings, keeping that in their pocket or in their account. Okay. They may want to move closer to family or friends. Okay. Get them closer to the grandkids. That's a big selling piece, closer to their daughter, their son, whatever. We
Do
talked
you
about
all
that. Sure.
Lisa, do you all have a list of those approved FHA properties that you were mentioning? Would you have a list of those that are approved?
I have to look into that, but I think, Valeria, FHA wants the property to be in a good state of repair. They want it, ideally, the newer the better, right? So if it was,
Right.
yeah, we don't want something that was built in 1962, you see? So if it was built in 1980 or later, right? And I'm thinking, if these folks are upgrading or downsizing, or they want to maximize their purchase power, they might be interested in a newer property, right? Or something
Right.
bigger, more than what they might otherwise be able to afford. So what we want to avoid are the properties that are not livable and not in good condition. So if I can find a list, I'll be happy to send that to you. But I think what we want to keep in mind is the property must be in a state of good repair. And so when you think about FHA is looking at the property and saying, okay, this is not acceptable. We want the property to be acceptable. These repairs need to be made. We don't want to run into any of that. Find them.
Lisa, I can send you a list of houses that meet your criteria that would be FHA approved.
Thank you.
So usually if they say conventional or investor, you want to stay away from that. Or at least, especially investor, because that means they need some rehab into it.
We don't want to put our seniors in that, right?
Yeah.
Thank you, Vanda. Thank you. Okay. So they want to downsize, they want to lower the maintenance costs. They want to enjoy, carefree living in maybe a 55 or over community. So these are reasons that people might move, right? People who are 62 or older, these are reasons they might move. And so, in your own time, you can also come up with more reasons. And this is also on a case-by-case basis. Everyone's situation is individual and different and unique. And so when you have these discussions with your clients, what is their situation? And then structure your pitch to meet, what they might find attractive and appealing. They might just tell you, this is why I want to move. This is what I'm looking for, and here's why. The kids are gone. We don't need this big house, right? We want something in this new neighborhood, or we want something in this 55 plus community. We want something on one level. It could be any number of things. And so just be open to that. Okay, so let's move on. Let's see. And here's the other thing. If they have savings, they have a retirement plan, a retirement account, they don't want to dip into it. They may not want to dip into it, right? They want to keep their money for whatever reason. It makes people, I know I'm happy with money in my account.
Oh, yeah.
I can't think of anyone who isn't, right? So that's a selling point, right? So there's that. Okay. HUD-approved condos, single-family homes, 2 to 4 unit properties, all new construction. Okay, we have to have a certificate of occupancy in place for new construction, and for all HECM purchase transactions, we need to confirm that they will be occupying the property as their primary residence, which is a requirement for this loan. Okay. So let's see. We talked a little bit about the benefits. Let's move into. So I mentioned earlier that the home equity conversion mortgage or reverse mortgage is a non-recourse loan. Okay. And so what that means is the borrower, your client, will never be liable for any more than what that home is worth at sale, right? So there won't be any kind of deficiency judgment or anything along those lines. So the lender can't come back and say, we only got 480 for the property sale, you're on the hook for 20,000. That won't happen. Okay, it won't happen. Okay, so typically when we talk about reverse mortgages, most people are familiar with using the reverse mortgage to refinance in the current home that they're in. But for your purposes, we're talking about using this product to get your buyer into a new home. Okay, and so typically there are different ways that the buyer receives the payment for the reverse mortgage. And if it's a refinance, they can either do a term payment or a 10-year payment. But here, the lump sum is going to the purchase or the balance of the purchase price, right? So they're coming with cash. Let's say we're using an example of a $500,000 house. They're coming with $250,000. The remaining $250,000 will be that lump sum reverse mortgage, and it's given to the lender, the builder, the seller, whatever the case might be, to get them in that home. Okay. Let's see. We talk about a forever home. Your clients may want that, something that they will stay in. They want to age in place, right? I think those are key words, right? When we get older, how do we want to live out? Where do we want to be? Do we want to be in our home, in the comfort of our home? Do we want to, it really speaks to everyone's individual and unique situation. And this gives them the opportunity to age with dignity and to age in place without a payment, right? Because there are, enough expenses in retirement. We get older, we have more medical expenses, things of that nature, that we might want to keep our money for those things and not have to worry about a mortgage payment, but we can still live comfortably and enjoy our life. That's the goal here. That is the goal. Okay, let's see. Any questions so far?
Well, I have a question. I know years ago there was a bad, reverse mortgages got a bad rep. And is there any way you can touch on why it might have got a bad rep, or what people didn't understand, or what we can say to people so that they won't turn up their nose at a reverse mortgage?
So I don't know that exact scenario or situation, but what I can say is what often happens is these people who entered into the reverse mortgage had kids that had expectations, and now they're disappointed because now I can't get the money from mom and dad's home. And so this is why I say, have your clients have a discussion, sit down with the whole family, make sure everyone's on the same page, right? Do you have kids? What are their expectations for the house that you buy after you pass on? So again, it's not for everyone. So we don't want to make it for everyone. And we don't want to paint this picture like this is the answer for all your problems, right? And so everyone's situation being unique, having that discussion with them and understanding. And again, I think it's the heirs. I think it's the children who are then shocked and disappointed. Like, oh my God, I'm not getting this $100,000 to $200,000 from mom and dad's house. Darn it. Go out and make a living. How about that? So, so I think that's a big part of it. But I think that one of the best ways to approach that is to say to them, listen, talk to your financial advisor, right? About your retirement goals. Take a look at your financials and talk to a professional as it relates to that. So then the entire onus is not on you as a realtor. Well, my realtor said this is best for me. Talk to your financial advisor, talk to a tax professional, have them do their due diligence as well. So then they don't come back to you and say, you talked me into this. No, I didn't. No, I didn't. You did your research as I suggested. You got some information from your financial advisor and you made a decision an informed decision that you made. I didn't make you do it. Right. So, we want to protect ourselves, but we also want to give our clients good advice. And we also want to encourage them to talk to the professionals in areas where we are not professionals. I'm not a tax advisor. I'm not a financial advisor. I'm not going to give you that advice. I'm just going to tell you what I know. And I'm going to give you the best service that I have and the best products that I have based on what I know. Right. And so if it's out of my wheelhouse, I'm going to send you to someone else who can give you the advice that you need. I think that's the best way to sort of protect yourself from that.
So you know what, Lisa, I'm glad you said that because I actually have an appointment tomorrow with a financial advisor. And I knew I was going to have this meeting today with you guys. So what would be some of the key things that I would need to cover with that individual tomorrow in regards to what we're talking about today?
So you're meeting with a financial advisor for yourself or tell me a little bit more about that.
For myself, just,
Well,
from time to time, I usually try to bring myself up to current times and stuff and what's going on in the market today versus, years ago, what was going on. So, to just bring myself up to speed with what's going on and what's current information going forward today. So looking into, as we're talking about this reverse mortgage and things of that nature, what I would want to talk to him or her or whoever I'm meeting with tomorrow would be something that I would want to make sure that I touch on and cover that they may be able to share some information to me for that reason.
Well, if this is something, let's say you're considering a reverse mortgage for yourself, then that's a discussion. Open that line of discussion with your financial advisor. Get their thoughts on it. And they can talk to you about, they can give you their expertise regarding maybe the benefits, the pros, the cons. And so this, in addition, helps you to make an informed decision, right?
But see, this is coming through the bank, and so, banks are going to always want you to try to direct your attention toward them and using their bank for your needs, your banking needs. So
you have to keep that in mind when you walk in the door, right? Are they speaking to you based upon what they want or what they can gain, or are they communicating and advising you to help you?
Right.
So right. That and think about that while you're meeting with them. Objective. What do they have? What's their with them? What's in it for them?
Yeah. And see, I scheduled the meeting because I wanted to, after talking with you guys today and getting a real clear understanding on how this reverse mortgage works, then I could go into the meeting with them with that information and that knowledge that I've gained today. And that will better tell me, are you really there to help me, or are you really there to help yourself?
There you go. And if you don't have the PDF, make sure you have it, Valeria. I'll send it to you. And so you'll you'll have that with you when you go in, and you can discuss, and you'll have some talking points, and you'll have questions that you'll ask based on what you see there in those materials. And I always encourage people to do research, and you don't have to believe me. Do your research.
Okay.
When you're ready, call me. Right. So
I will. And Vanda, I'll be calling you too.
Okay.
Okay. Well, thank you, Lisa.
All right. So for the equity to cover the accrued interest in that transaction, you're going to be required to pay essentially half of the home sale price in cash. Right? Where is that cash coming from? That cash is coming from the sale of your client's house that they've owned for years. Hopefully they have a ton of equity, or they own it free and clear. Okay. In many cases, the client, they don't want to put all of their money down on the new house. So that's a discussion you want to have as well, right? How much are the proceeds from the sale? how much do you want to keep in your pocket, right, for this new purchase? Because if we have to put down 50%, this is what you need to put down on this $500,000 house, right? Are you getting 500,000 for the new house? Are you getting 400? What do you want to keep in your pocket? These are discussions. And if you don't feel comfortable having the discussions about the numbers, send them to me. I'll talk to them. I'm happy to do that.
I have a question, Lisa.
Sure.
Hello. Now, if the house, let's say the house is 500,000,
Yes, ma'am.
can you put down 200 and mortgage 100?
I would say, so is that going to cover the 500,000 purchase?
No, so you, in other words, so you can have a small mortgage yourself if the house costs more. Let's say you sell your house for 400,000. You want to keep 200,000 in the bank. You put down 200,000. Can you get a reverse for just 200,000 and get a mortgage for the other 100,000? Am I confusing you by?
No, you're not confusing me. It's just, that's a unique situation. And so what I would
Okay.
say, the way I would answer that would be, the older you are, so let's say if you were 62, then you have to put down more money on that new purchase than you would if you were, for instance, 70 or 75. So
Okay.
you might get more reverse mortgage money toward that purchase than you anticipated. So
Okay.
you may be able to keep that 200K in your pocket that you wanted to keep.
Uh-huh. And
And
put down less, and put down less is what you're saying.
Exactly.
Okay.
Exactly. There you go. Exactly. And so you may not. So the goal of this is we don't want you guys to have a mortgage payment. Okay. And
Okay.
I wouldn't want you to have one. Why? Why would you? If you can avoid it. And so again, back to the older the borrower is, the more we can get you in terms of the reverse mortgage toward that purchase, right? So you can keep more of your money in your pocket from the sale of that house. Okay.
Okay, thank you.
Good question. No, thank you. Okay, so monies for down payment, in many cases will come from the sale of the house, realtors. So we gotta get those houses sold, okay? And
May I ask a question? I'm sorry.
yes, ma'am.
I wanted to know what's the amount of equity that they need to have. Was it 50% or 75?
So again, typically 50. Let's use that as a benchmark. But the
Okay.
older your client is, the more we can get for them in terms of that reverse mortgage.
I
Right.
see.
So yeah, if they're 62, let's go with 50%. If they're 75, that percentage or that down payment that they need will decrease. Okay, and we can get
I
them more.
see. Okay.
Yeah. And so I say to realtors, get them the most they can on the sale, right? Everybody's happy. And then have me take a look at the file, and then we'll get them the most that we can get them based on their age and, based on their financial situation and the taxes for that property. Can they afford it? These kinds of things. All right. But I think what's important is the pre-approval, right? How much house can they buy on the back end? So you'll know that. And you'll sell the house, and then you'll already know how much house to look for going forward, right? Because you're going to be doing essentially simultaneous transactions, right?
Right.
So you're going to sell that house for them. You're going to be looking and shopping for a new house for them. So I think it's a win-win. Am I wrong?
You're correct.
Thank you. Thank you. Thank you. Okay, so the funds they can come from savings. The down payment can come from the equity in the home that's sold. Can come from savings. Some of the funds can be gifted. So that's fine, but none of the funds for the down payment can be borrowed. So that's not unusual, right? We see that, right? We see that a lot. It's not unusual. Perfect. None of the money can be borrowed. Okay. Again, the older you are, the more money you can get, the less money you have to bring to the closing table. Down payment is based on the age of the youngest borrower. So if you have a couple, and let's say the wife is 62, but the husband is 75. So it's going to be based on the wife's age. Okay.
Okay.
75 husband. Okay. All right.
They assume she's gonna live longer, right?
she's gonna live longer, right? She's gonna outlive him. Yeah.
Most women do.
Yeah, yeah. So, but you know, and the price of the new home, again, I can't stress enough, 970,800. Do we love that? I think we do.
Mhm.
I think we do. I do. All right. So typically the down payment for the home equity conversion mortgage for purchase is 50 to 60% of the purchase price. Okay. So keep that in mind when you are when you're looking at the equity in that client's property. How much are they going to get on the sale, right? Do they own the house free and clear? Okay. If they don't, how much are they going to come away from that sale with, right? Now, on the other side, how much is the new house they're looking for, right? How much do they need to put down? If they need 50 to 60%, are they going to get enough from that sale, right? So you want to keep those things, both those pieces in mind when you're putting these deals together for your clients. If they own it free and clear, hey, it's party time, right? Let's get them moved. Everyone's happy. Okay. So, and this is good. So for example, it reads for a 62-year-old borrower, that person might be eligible for 50% down. All right. And for a borrower that is, well, 92, you know, they might be eligible for 75% of 75% in terms of the reverse mortgage. And forgive me, I haven't worked with a lot of 92-year-old borrowers. So I mean, I don't know. I don't know if we're going to run into that a lot, but just something to keep in mind. The older you are, the more money you can get in terms of the reverse mortgage. All right. And there's a chart in the PDF where it speaks to the age, the down payment as it relates to the sales price. And you guys will get this if you don't have it already. Take a look at that. It'll give you some guidance. I found it helpful as well. Some of the information in the PDF is redundant. That's fine. If you see it more than once, twice, you're going to remember it, right? And you'll still have the document to refer back to when you're looking at these deals and when you're talking to your clients, okay? Everybody has a mom, everybody has a dad, everybody has, and they have friends, right? And so this product can help a great many people, Everybody's aging. Sadly, we're all aging.
I have a question.
Yes.
So it says on here that it's due payable when you die or when you move out of the home. What if they go to a senior living facility?
Yeah. So if
That would
they,
be considered moving out?
yes, ma'am. And they have that equity because you remember they came with 50%. So as long as the lender gets their money that they lent for you to buy that new house and you still have equity, take that money. And if you want to go to a senior living facility, take it and run. And there you got another sale because they don't want the house anymore. They, you know, things change. What we want and need changes as we mature and age. So this is, you know, this is something you can keep building on, keep using. Who's not aging? You find someone, you let me talk to them because I want to know what elixir they're using. All right. I want to know. I really want to know. But okay. So
Lisa, I have a question.
yes, yes, ma'am.
Okay, so talking about this product,
Mhm.
you know, they have these different programs like NACA and stuff like that, the different ones that are they able to use those times? Because sometimes you have those companies like NACA that will pay your closing costs and different fees and stuff for you when you go through their programs. Are they able to be fitted into this scenario?
I do not have an answer for that. I can find the answer for you and get back to you, Valeria. But
Okay.
my understanding is that the closing costs can be rolled in with this reverse mortgage. But I
Oh,
will
good,
yeah,
good.
I will confirm. All the borrower or your buyer should be coming with is the down payment. Yeah, yeah.
Excellent. Okay.
I don't know the role in terms of bringing NACA aboard with this product. I can look into it and get back to you. However, hold on. I have to make a note because I'm aging, Valeria, and I'll forget.
Aren't we all? You know what? I got my notepad here.
Yes, yes, it's real. Look, it's real.
Let me
Yeah.
tell you something. I know, I mean, I don't think it's an age-based situation. I think it may be more prevalent with age, but I think everybody probably needs to make note of something at some point in time.
You're right. You're absolutely right. I document, I track everything. Okay. All right. So let's see. So, let's talk about the cons because we said that this is not going to be for everyone. There's going to be some sons and some daughters who are going to say, Mom and Dad, don't do this. And they're going to talk them out of it. And I work with people that want to work with me. They're serious about moving forward. I'm not in the business of dragging people kicking and screaming across the finish line. That's not what I'm here to do. I want to spend my time and my efforts working with people who are serious and they want to move forward. So present the information to these families and let them make a decision. It's not going to be for everyone. And that's just the bottom line. Okay. So again, the borrower's heirs may see reduced inheritance after the sale of the home, okay, and the repayment of the loan. They're going to be mad about it. And they're going to say, Mom, Dad, don't do this. It's a bad thing. Is it bad for mom or is it bad for them? Right? So
Right.
that's what you want to look at, right? Who is it bad? Who's making this decision? Is mom and dad, is it their decision? Do they want to live their best life or the kids, trying to cash in? So again, I'm not trying to convince anyone, but I do want people to understand that there are pros, there are cons. Your financial advisor might tell you something different, but you've got to make the decision. Your clients have to make the decision. All you can do is inform and educate them. That's it. Right. Okay. Let's see. Due and payable. We talked about that. So yeah, if you move out, if you die, if you stop paying the taxes and the insurance, then guess what? That mortgage is due and payable. And it's time for you to go. Then you will be going to the retirement home, unfortunately. Either willingly or unwillingly. Okay. So but I think we touched on a great deal here, guys. And like I said, I'm happy to answer any questions or do, some one-off calls, conversations. We can talk more about it. And I will send everyone the PDF. But tell me, what questions does anyone have? Or is there anything that I haven't touched on that might still be unclear or just, what questions do we have? Okay, my work is done here.
How soon is the, like when they go to closing, do they usually try to close pretty fast or how is it, what does that usually look like? Is it drawn out or what happens?
This reverse mortgage process may take a little bit longer. The appraisal is a big piece. And in some cases, I think it's rare though, there might be a need for a second appraisal. But I think that we can easily say 45 to 60 days, just to be
Who takes
conservative.
care of the appraisal?
The borrower. Yeah.
Okay.
Do they pay that up front or is that rolled into the loan?
Typically up front.
Okay.
Okay, so you have to account for being able to pay for the appraisal. Is that for both properties?
Well,
The one you're selling and the one you're buying?
no, for the one you're selling, the buyer, because hopefully we got that deal under contract, right? And we got a buyer for that house. That buyer is going to pay for that appraisal. And on the new house, your client will be paying for the appraisal on that new house. Hi, Ashley. Yeah.
Okay.
Yeah.
Well, Valeria, I look forward to talking with you Monday after you talk with your financial advisor on Sunday.
Certainly. Be ready for my call.
I will. I got you on my calendar to call at noon if you don't call me.
I'll talk to you after this meeting and tell you what time my appointment is with that advisor so we can schedule a callback time.
Okay.
This is terrific.
If there's no more questions, I think we're good. And it's, the top of the hour. So we're right on time.
You did good. We did great. Thank you.
Everyone.
Thank you.
Thank you.
Thank you, Lisa. Thank you so much. That was very informative.
Yes.
You're very welcome. I'm here. I'm available to answer any questions you have. My contact information is either in any email that you've seen or on the back page of the PDF. Feel free to give me a call. Sadly, I answer my phone if I'm not asleep. I always answer my phone unless I'm asleep. So feel free to give me a call.
Okay,
Thank you so much, guys. Have a great weekend. Happy Saturday.
Thank you.
you
Thank
as well. Thank you. All right,
Thank-
well, I enjoyed it. Thank you, everybody.
All right, excellent.
Thank you.
Have a great day, everyone. Take care.
All right, okay, bye-bye.
Bye. Thanks, Vanda.